Hey, welcome back. Today it's Sunday, July 5th, 2026, and we had a long weekend with the market being closed on Friday for the July 4th holiday. So today we're going to do a deep dive, multi-time frame analysis on a lot of names to get ready for Monday morning. Feel free to use the chapter markers to jump ahead if you're short on time. And last week we had a very strange holiday shortened weekend. The Dow hit a record high, the S&P finished strong for the week, the Nasdaq still gained on the week but ended with damage underneath the surface. And semiconductors had a violent unwind while software, financials, healthcare, and parts of the defensive market held up much better. So today before we jump into the charts, I want to cover three things. First, the big stock stories going into the week. Second, how the sectors performed last week. And third, the macro calendar we need to watch this coming week. And quick disclaimer, this is not financial advice, this is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more. And thank you so much to everybody who's subscribed already. I really, really appreciate it. Also, since this video is going to cover a ton of names, please leave comments with the tickers you want me to prioritize next. Tell me whether you want the chart, the fundamentals, the option setup, the GEX, the support and resistance, or the trade architecture, or whatever else you'd like to see. And if you want these deeper dive trade prep videos before the market opens each week, please subscribe and turn on notifications. So there are a number of major stories we need to understand going into Monday. And the first one's not a headline per se, but the biggest market story is still the rotation inside the AI trade. It's not as simple as AI is dead or tech is dead. The real story is that the market is separating AI hardware, semiconductors, memory, and infrastructure from the hyperscalers and software names. Last week, the crowded momentum trade started to unwind. Semiconductors and AI hardware got hit hard, while parts of software, cloud, healthcare, financials, gold, and crypto caught bids. And that matters because the market might not be abandoning AI, it might be repricing where the value actually accrues. If the market thinks the hyperscalers can monetize AI spend, names like Microsoft and Meta can work. But if the market thinks too much capacity has been built, then semis, memory, and AI infrastructure can stay under pressure. And that's why today's deep dive into names like Microsoft, Meta, IGV, Now, CRM, and Amazon are so important. The second big story is what happened with Meta last week. And if you didn't see it, Meta's reported plan to sell excess AI compute through a cloud style business changed the narrative, not just for them, but for the market in general. Before that, the bear case was simple. Meta is spending too much on AI, and investors don't know when that spending turns into revenue. Now the market has a possible answer. Maybe Meta can monetize excess compute. But that also raises a second question. If Meta has excess compute to sell, is the AI infrastructure market overbuilt? That's why Meta ripped while some AI infrastructure and semi adjacent names got hit. So Meta is now one of the most important charts on the board going into Monday. The third story is semiconductors. And of course, it's related to the AI rotation trade, but I wanted to separate it out from AI hardware, memory, infrastructure, etc., and just focus on it because last week's damage in the chips was not small. This was a real momentum unwind. And we're looking at SMH here. And the important question now is whether SMH stabilizes or whether this becomes a deeper rotation out of AI hardware. If semis stabilize, the market can probably treat last week as a violent but healthy rotation, or even just a much needed pullback after a huge run. But if semis keep breaking, then QQQ can stay under pressure even if the other sectors are acting well. And that's why SMH is on the watch list today. The fourth story is SpaceX. SpaceX is set to join the NASDAQ 100 before the open on Tuesday, July 7th. And that matters because index inclusion can create passive buying flows from funds that track the NASDAQ 100. But it can also create volatility, especially because SpaceX has already been moving around aggressively since its IPO. So I would keep SpaceX on the radar, even if we're not deep diving it today, because it can affect sentiment around the growth, innovation, and space trade. The fifth story is oil. OPEC approved another output increase for August, adding more supply as Strait of Hormuz traffic continues to recover. And that matters for energy stocks, oil prices, inflation expectations, and the Fed path. If oil keeps coming down or stays contained, that helps the inflation story. If oil spikes because of geopolitical risk, that can immediately bring back the inflation pressure and complicate the macro setup. So even though today's watch list is more tech, rates, gold, and crypto focused, oil still matters a lot in the background. And finally, earnings season starts slowly this week. It's not a huge earnings week yet, but we do get PepsiCo on Thursday and Delta on Friday. Pepsi matters for consumer staples, pricing power, and the health of the consumer. Delta matters for travel demand, services demand, and whether consumers are still spending on experiences. And of course, we've all been watching American Airlines on this channel. And the real earnings season ramps up after this, but this week starts giving us the first clues. Now let's quickly look at how the sectors performed last week. The best performer was healthcare, followed by communication services, consumer cyclicals, and financials. After that, we had a bit of a fall off in the gains there for consumer defensives, real estate, basic materials, but they were all in the green as industrials finished basically flat, technology was down, utilities were down, and energy was down. But you could see that most of it happened later in the week, technology down quite a bit, but for the week, it wasn't actually as bad as it may have felt if you were holding these individual names going into the close of the week there. And if we look at it on the monthly, though, we could see quite a bit more damage, and technology, but healthcare really being the outperformer in the month. So these are things to keep in mind because they don't always feel that way, especially for retail who are doing more high beta investing there. Um, but the sector message is very clear here. The market didn't crash last week, but leadership changed. Communication services and financials and healthcare and consumer discretionary all work. Software started to repair. Gold and crypto caught some bids, and semiconductors and parts of the AI hardware trade got hit. And that tells us we're in a stock pickers market, essentially, in a sector rotation market. This isn't a tape where you can just say tech good or tech bad. You have to know which tech, you have to know which time frame, you have to know where the crowd is positioned, and you have to know what the chart is actually confirming. And that's why today I'm going to be doing some multi-time frame deep dive into some of these individual names that everybody's been requesting. Now let's talk about the macro calendar. And quick disclaimer, I'm on the West Coast, so my times are showing a Pacific time zone, so you'll need to add 3 hours to these times if you're on the East Coast. This week is much lighter than last week, but there are still a few important events. On Monday, we get final services PMI and ISM services. That's probably the biggest economic data point early in the week. Last week, we got the softer jobs report, but services are still the heart of the U.S. economy. So if ISM services come in hot, especially with sticky prices, yields could push higher again. If it cools in an orderly way, though, that may help the soft landing narrative. On Tuesday, let me scroll down here. On Tuesday, we get the U.S. trade balance, and that's usually not the biggest market mover, but it can still matter for GDP tracking, the dollar, and global demand. On Wednesday, we get wholesale inventories, consumer credit, and the big one, the minutes from the June FOMC meeting. And the Fed minutes matter because the market is trying to understand how hawkish this Fed really is after the June meeting. Last week's softer jobs report reduced some hike fear, but inflation is still above target, oil is still a risk, and the Fed has been trying to re-anchor credibility. So the market will be watching whether the minutes sound more divided, more inflation focused, or more open to pausing. And then on Thursday, we get initial jobless claims and existing home sales. Claims matter because after the softer payroll report, every labor market data point matters more. Existing home sales matter because housing is one of the areas most exposed to rates. If housing weakens further, that tells us the higher rates are still biting. If it stabilizes, that helps the soft landing story. And Friday has no major economic reports scheduled. So the macro setup this week is pretty simple. Monday is services, Wednesday is the Fed minutes, Thursday is claims and housing. And in the background, we watch oil, the dollar, yields, gold, and Bitcoin. For me, though, the biggest macro question is this. Did last week's softer jobs report give the market enough relief to keep rotating into beaten down quality names, or do yields and inflation fears come back and pressure growth again? That is why TLT and GLD are so important in today's watch list. TLT tells us how the bond market is digesting the Fed and the data. GLD tells us, we're using that as a proxy for gold. GLD tells us whether the market is still leaning into dollar weakness, lower real estate expectations, and macro uncertainty. And IBIT, as a proxy for Bitcoin and crypto in general, tells us whether crypto is starting to act like an alternative liquidity asset again, or whether it is still just another high beta risk trade. Before we jump into SPY, quick note on formatting. Usually I do a market weather report using the S&P 500 as the market and SPY as the proxy, and I'll keep doing that in normal recaps, but today's video is a deeper weekend prep, and I'm running every name through my alpha harmonic framework. It's the way that I usually look at stocks in general for my quantitative trading, and I'm going to run SPY through it too. And at a high level, the framework looks at 5 things: macro structure, momentum friction, options and flow mechanics, fundamental and regime context, and trade architecture. And the goal is not just to say bullish or bearish, it's to understand where the setup is clean, where the risk is, and where the market may actually force a decision. For the more standard SPY weather report, watch Thursday's recap. I'll link to it somewhere on screen right now. But today, since we're doing a full multi-time frame prep for Monday, SPY is going through the same framework as the rest of the watch list. So let's jump into it. So I'm going to be going off script, so bear with me. Usually I have my algorithms running through this multi-time frame analysis and pulling out all these different indicators and helping me understand if I should have conviction in a trade or be sitting it out or what market regime we're in. But I want to show you how to do this so you understand it. Plus, I think it's compelling to run through it on your own, but just pointing out that I'll be off script, so it could be a little clunky, as you've already started to hear. On the left, we have the monthly time frame. On the middle screen here, we have the weekly, and on the right, we have the daily. And so the first thing to look at, of course, is the highest time frame that we're looking at. And on the monthly, we can see that the secular uptrend is still intact. We're in a bull market. And you can feel that in general, but it probably didn't feel like that over the last 2 months, because you can see we've had 2 months of red there. And the other thing I want to take away from the monthly is how strong is that trend. So I'm going to look at the RSI, and I'm also going to look at regression channels. And the interesting thing about regression channels is that institutions trade a lot of mean reversion, or at least they're aware of it. So if you don't know what these regression channels are, essentially this middle line is a trend line that is mapping out the mean price over the length of this chart. Now I'm on the monthly and it's over 10 years. So that's a trend line for the mean price over the last 10 years. And the lines above it and below it are standard deviations away from that trend line. So this is one standard deviation above it, and this is two standard deviations above it. This is one below and two below. And essentially, we hit the upper regression channel. And like I said, institutions like to play mean reversion, or at least be aware of it, because they're saying, hey, we've gone two standard deviations away from the mean. Is it likely, statistically speaking, that we're going to go three? Probably not. So they're looking for trades that are more similar to that regression back to the mean, or at least they're not taking trades that require a third standard deviation away from the mean. So that to me already says it's more likely that we're not going to blast to the upside. That's just a data point that I take in. And then what the next thing that we look at is the RSI. And so the RSI is diverging. This is a bearish divergence. Essentially, we made higher highs, but RSI made a lower high. It didn't continue upwards. So to me, that already says the trend is weakening. So those are the big takeaways for me on the monthly. And then on the weekly, I'm going to start to get a bit more granular. I'm going to say, well, how are our stacks looking? And so what I'm talking about is a simple moving average stack. So this line right here, this blue line is the 20 simple moving average. This line right here is the 50 simple moving average. And this down here is the 20 simple moving average. And what I take away from that is that the bull trend is still intact. Okay. And then when I look at the RSI here, I'm going to say, well, is this actually divergence? Is this consistent with the trend? And what this is consistent with for me personally is a choppy market that is doing a pullback in time. Essentially, we're holding the price. RSI is cooling off. And so you could have a big pullback after that, because you see what happens is sometimes you have that chop, we kind of float upwards, and then there's a big pullback because there's not as much strength going on. And so price won't be protected. But I'm also going to get off the time frame for a second with you guys to talk about flow, and I'm going to get into it a bit more. But essentially, I already know, and I mentioned in other videos, that there was a lot of dark pool activity and GEX activity at the 750. So until we break above that 750, I actually don't expect the weekly to start looking stronger. And so that's just something to look ahead to. And I'm mentioning it here because we're seeing it start to play out. And that's why all of these things come into one big framework that we need to look at together. But continue on with the timeframes here. If we look at the daily, actually, one last thing I want to mention is the volume profile here. And so again, this is based over the length of my chart, and we're on the weekly, and this is over the course of 3 years. And over the last 3 years, most of price has traded around 788 down to 785 on the SPY. And we are quite extended from that at 744. So it wouldn't be odd for me to see a pullback to that. And what you might also notice is that pullback would be to the previous all-time high and breakout level. So this would be a breakout and then a retest. So that wouldn't be that weird. So I do have that in my thesis. If we pull back to there, I'm looking to get into certain things. Again, not advice. That's just how I'm looking at the market. And now let's look at it on the daily to see what else we can take away from that. So in the daily, this is the first time we can see that the super trend has been broken. So I don't love that as somebody who would be going long, but as you can tell, I'm already not particularly bullish for a continued upside at the moment, at least until some of our trend lines start to catch up to price, as along as some of our volume profiles starts to be repaired. Because if you look at it, there is a bit of an air pocket here. And man, if we fell through that and came down to this air pocket, which would be quite a pullback, but not unheard of, especially if we enter some kind of bear market in the future, I would be expecting that more in 2027, of course. And as you can see, it's a lot easier to make some of these predictions looking at these higher timeframes, which is why I'm looking at them, but I wouldn't be surprised. And so for me, I'm not going in aggressively into SPY at the moment. And like I said, on the daily, you can see this is the first chart where we've entered a super trend to the downside. And a lot of people don't look at super trends necessarily. They just draw their own trend lines. But you could see we've come below the 20 simple before, and now we've caught up to the 50. So it wouldn't be odd if we came back up, but I'm not seeing continued upside being the base case for me, particularly, at least at the index level. And we'll talk about it in individual names soon. So on the daily, it's just a bit more of the same that I'm seeing on the other charts, that the asymmetric play is not necessarily to the upside. And if you'd like, we did a breakdown of SPY a little bit more based on these basic technicals on the video we did on Thursday at the market close. And so then the next thing to talk about is just maybe the lower time frame. You guys are probably all used to this. This is my general chart. Not a lot to take away here. Like price was relatively choppy. It was a shortened week. So there was a lot of reasons that some of the data came in a little sloppy over the week and people are trying to make sense of it. And so I wait to see how the positioning will be on Monday. And one thing I can say is that the pivot levels held well. And so these are my pivot points. And we lost the pivot point right here. It came down to S1. We fell below it, regained it, and came back up to the pivot point. So that is essentially what a flat day looks like. We were down 0.13%, but basically flat on the day. However, on the hourly, we are having some hard time with this 200 simple moving average, but that's not unusual for choppy markets, although we are starting to trend downward, and you can see that going on here, or maybe it's a wedge pattern, which is an interesting one, but you won't know it till it breaks. But what I do want to point out on the daily, since a lot of that seemed like indecision, which tends to happen based on what I said was going on in the monthly, in the weekly, and of course on the daily, is that this first resistance line here. So my pivot points are calculated at the end of the day here. And you can see that the pivot point, which is expected to be that kind of flip line, if you will, is at 745, but R1, which is the first resistance level, is at 750. So what you're seeing now is a confluence of two things. You're seeing the pivot points say that this could be the first level of resistance. And we also saw it on the dark pools. Like I said, I'm not showing you the dark pool data necessarily. That's some proprietary data. And you can go online and subscribe to different services to get that. But and sometimes you see it come through on the time and sales. But I know that there has been a lot of dark pool activity at 750, and I will also show you on the GEX there's a lot there. And I'm also seeing that that's the first resistance line. So to me, that says it would be very likely that we could hit this and then come back down below it. However, if we went above it, came back down to hit it, and then continued upward, I would say, wow, we broke through that. That is now support. So that's what I'm watching for on the SPY on the actual charts. If we look at it on the GEX here, you can see right here at 750, we have a huge cluster. All right. That is a lot of activity compared to what else was going on. And this is just on the near term. This is just for the first expiration on Monday. But then you can also see that playing out on other days as well. And you can see these stacks going on here. But what that generally means is that if we get to 750, the market makers are going to start to sell and we see a dampening effect. So it would be hard to break through that. However, if we gap above that, that would be amazing. So to me, this says that we really need some catalyst to get us above 750, or we're going to be chopping around. And then even after that, what I want to see is I want to see us get above that, come back and retest it, and then continue upwards. And now that will be a level that I'm willing to trade off of. It's a simple verdict for me here, which is that I'm not looking to long SPY. I'm also not looking to short it. It's just essentially telling me that we could be chopping for a while. However, on the higher timeframes, it seems like it still is constructive for individual sectors and certain stocks. So it's a stock picker's market, as we've already discussed. But I did want to point out that the way that I actually do all of this is I run an algorithm that extrapolates all of the RSI information, the daily time frame, the weekly, the monthly, et cetera, the moving averages, all of that stuff. But it also plugs in things like fundamentals, which are a lot harder to pull in for SPY. It's macroeconomics, it's the Fed, it's all of that's inflation, all of that stuff that you have to pull in. So I'm not going to get into that now. Some of the individual names, I'll cover that because we can look at their financials and their fundamentals a lot easier within the context of a single video. But essentially, when I plug that all in, and if I wasn't making this video for you and I was just telling you my assessment of it, it would be that the SPY is not something I'm going long on now. It's not something I'm going short on now, but it's a good enough environment and regime for me to trade individual sectors and names. All right, and the next one to look at is Amazon. And since I showed you guys on SPY how I do this a bit more thoroughly, I'm going to do it at a bit quicker pace now for each individual name, since you guys are already professionals and you can come back and look at these charts yourself now that you know how I'm doing it. And so the very first thing to look at is the monthly. And of course, we can see that the similar to the SPY, that the uptrend, the secular uptrend here is still intact. And unlike the SPY, we're not at the upper regression channel yet, so there's still room to run. And something that's very interesting here to me is that we're consolidating around 2025's previous breakout. So this previous all-time high over here, we broke out above it, continued to break out, came down and retested it. And now we're consolidating around that range. So that is a compelling data point to me. On the RSI, it's starting to digest that move a bit. It's not pulling back. It's not breaking down. It's not ramping up. This looks relatively healthy to me, and we have been range bound to some degree on the daily, and you'll see it over here. And Amazon is one of those names that hasn't just been blasting to the upside in the way people are hoping that it would. But you could see that it is an uptrend. So that is something nice to get off of the monthly, even if it doesn't feel like that to you when you're intraday trading it. Now, if we look at the weekly, something I like to notice is the simple moving averages on the weekly. And so right here is the 20 simple moving average. We are holding it, even though we came down into it hard. And that's usually a good place for people to get in long. So we did see some buying happen there. We're also above the 50 simple moving average, if I can even find it, because I have so many day trading lines going on here. It's getting much closer. So it's right there. So they're starting to converge, and you'll see why that's happening on the daily momentarily. We're still above the 200 simple. But this does look like a lot of consolidation to me. I hope it's not really a breakout failure over here, but it doesn't feel quite as steep as that to me. And we're coming back into this trading range. And I'll tell you how I feel about this. You may already know that from some of my other videos, but Amazon to me becomes a little bit clearer on the daily. And so you may have noticed that 20 simple moving average on the weekly looks very similar to the 200 simple moving average on the daily. And what happened here was after we came down below it, the bulls bought it up with a huge amount of volume, essentially trapping anybody who had bought it down here. So that is very interesting. And the other thing to notice about this, unlike the SPY, if we look at the volume profile on the weekly, the volume profile is where we came back down into, the point of control on the volume profile is right where we came back down into. And that's one of the reasons it got bought up so hard. And so when it got bought up so hard here, and that you could see that the point of control is the same on the daily, which is only going for the year. You could see the time interval is 1 year. So this is the volume profile for 1 year, is almost the same as the volume profile for, I believe it's 3 years here. That's very interesting to me, and I would expect a lot of buying to have happened. And if you were just trading the volume profile there on multiple time frames, that would have been a compelling trade. For me personally, the way I've treated this is that this is a good time for some long-term share additions. So I've been selling cash secured puts on one of my portfolios, so I could get assigned down there and maybe picking up a few shares in my long-term portfolio. So that's how I'm playing that name. And if you look at it on the intraday time, so looking at, let's go down to the 1 hour, the intraday time frames. I'm starting to see some inverse head and shoulders here. Like I said, it makes a lot of sense because down here was when we came to that point of control for the year and for the weekly. So I wasn't surprised to see all of this. But we're going to have to do some we're going to have to repair some of these simple moving averages on the intraday time frames for me. But until I see a huge reclaim of 250, I'm really not that interested in playing it that hard, but I know a lot of people are. But that's my read on Amazon there. All right, so the next thing to talk about is IGV. And this one will be a little bit different because I'm just looking at the sector before I get into individual names. And so let's go to the monthly, the daily, and the weekly. So on the monthly, it actually looks a lot worse. We've come into a super trend downtrend. So that's, again, this red cloud that we have here. But the interesting thing about this super trend, I hope you guys all noticed now that I've explained regression channels to you, is when we came down to that lower regression channel, we had a whole lot of buying. And so for me, not that that's the end of the downtrend on the super trend, but that tends to mark some type of tradable bottom for me. And a lot of people did start getting in around there. And it's funny, everybody was talking about SaaSpocalypse ending and this and that. But if you had just been trading the regression channels, this wasn't a bad place to necessarily get into it. But of course, combined with those fundamentals and the sentiment that we were just talking about, it becomes even more tradable. And everybody knows that I'm a bit bullish on this at the moment. And I'm just showing you one of the reasons why. And so the other thing to point out here is that we had this breakout in 2022 right here. This was the high in 2022, and we broke out of it in 2024. Now we've come back down to retest that, and we're consolidating around that breakout point. So this is an interesting level to me that I want to keep in mind, this 90, as opposed to everybody looks for the psychological levels of 100, but it turns out the 90 is actually quite important right here. And so for me, that wouldn't necessarily be a bad place to say this is going to look like some type of support, even if we overshot it. And it would have been a great place for some initial entrances, maybe 10% of my position to start around that level. Now let's look at it in the weekly view here, because something very interesting starts to show up, which is this volume profile. You can see that there was a real air pocket after this breakout over there in 2024. So it wasn't surprising to me that we've been able to come back, fall through it aggressively a number of times. And only now would I expect that we start to slowly regain it. And you can see that's what's happening. And of course, course, on the weekly, we saw all kinds of things. The first thing I wanted to point out was this RSI bullish divergence right here. Price was making lower lows. The RSI was making higher lows. So the trend had reversed on the RSI there. And we could see that continue out. And you can see on the fibs there, we're holding the 618 really nicely. And also look at this point of control right here. This is the point of control on the weekly over the course of 3 years. And that's lining up really nicely with a few things. It's also lining up nicely on the daily. So this becomes a really great tradable level for me that I'm happy and comfortable to get in on there. And again, I'm covering IGV just before I do the individual names. So I'm not going to go through all of the GEX on it. Although I guess we can pull it up while I'm talking. So let me just go ahead and put IGV on the second one, and we will load that while we're going back to the charts here. So on the daily, same thing. We have a lot of, we had this big air pocket here, this lack of volume here. And so for us to reclaim it wouldn't be surprising to me. And we also, I've talked about this a number of times from a sentiment standpoint, but we can also see it from this RSI divergence right here, where price is making a lower and RSI is going up and making higher. So that is compelling to me. Plus, we're holding those fibs. You could see them on the weekly, but I also have them charted out here. It carries over to the daily. And the other interesting thing about this is at the close on Thursday, we finally broke into a daily uptrend on the super trend. So to me, that's a great place to be getting in. And then if we look at it on the daily here, similarly, we close right around where the pivot point is going to be, and we're getting tighter here. We're getting much tighter. And also, let me go back to the daily there because I didn't point this out, which is we're very close to the 200 simple moving average on the daily because we're below the stacks. We talked about it on other names, but I didn't do it as much on IGV because I'm trying to get through it. But we're coming up to this 200 simple moving average on the daily. So expect that to be the first place where we might see some real resistance. And however, the $100 price is also the next fib level that I'm mostly targeting because the 38.2 is still below that simple moving average. So I think we could go above that. So I'm watching it very closely, and it plays out with the pivot points because the 200 simple moving average, the R3, so the highest resistance that I'm actually tracking with the pivot points is slightly above that 200. So I would expect us to see a lot of resistance at that point, but I'm trying to see how strong that move is. So with all of that context, now let's move into some of the individual names that are trading on the IGV. All right, so next, let's do everybody's favorite, Microsoft. And on a high level, I think it's a major quality stock in structural repair, not a fully confirmed breakout yet. And let's look at the individual multi-time frame analysis to see why I think that. And on the monthly chart, before we get into the actual indicators and technicals there, it's a long-term compounder, and that structure is still intact, meaning it's probably going to continue its multi-decade trot higher. But the stock has clearly gone through a major derating cycle from the prior highs. It's not a clean momentum chart anymore, but it also doesn't look like a secular breakdown. It looks more like a high-quality mega cap that got pushed into a major valuation reset and is now trying to stabilize. And so the key point's pretty simple. It's a long-term trend that's been bruised, but it hasn't been broken. And now, depending on where you started watching it, it's either not a confirmed breakout yet or not a confirmed breakdown. So on the monthly, let's talk about it. So the first thing to notice is what we've all been talking about, regression channels, which is that we did have RSI divergence previously, right when we came into a regression channel, and it got pushed down lower. Now we hit this lower regression channel that was a swing low for us. We came down, we swept the liquidity there and started trotting back up. And it's interesting because a few things. One, this is happening right around the 50 simple moving average on the monthly. That's a crazy level or simple moving average to hit on a name such as this, but it's happened, so we have to react to it. We also saw a huge gap that happened back here, and I don't know if you guys remember that was on earnings not too long after the lows after Liberation Day. So this was a huge earnings report, and it left a huge gap there, and we filled it very quickly. And this was SaaS apocalypse, so there was sentiment reasons, but then when we hit that air pocket during the sentiment, it came right down through it, and we've come down to this previous breakout right here. So this wasn't a strange thing, and some people were calling for 300 on Microsoft, and it still could technically happen, but I'll tell you why I don't think it's going to happen on the daily, at least not until 2027. But so on the weekly, what I'm seeing here is we are in a super trend down, but the bottom of the super trend is looking more likely than not, just based on the regression channels there. But that doesn't mean it can't fall more for sure, but I would expect a little reversion to the mean before it does. especially because that's right where we got rejected before there, and this area is starting to get repaired. And so let's look on it the weekly now to see what we can see. We can see we're below the point of control on the last 3 years. So it wouldn't be strange for me to see us come back up to that. We also had a lot of RSI divergence happening. We saw it in multiple time frames, but right here you could see price went lower. And sorry, we could see right here, this low price went even lower where we got this liquidity sweep. RSI was much higher. On the daily, it's even stronger. You can see it right here. This RSI divergence, this bullish RSI divergence happened, and we got a huge pop right there. But there's a number of other reasons. One, because we are finally getting above the 200 simple moving average on the weekly, which is a range that institutions watch a lot for mega cap tech. It's 200 simple moving on the weekly is to start loading up some shares. It's generally a mandate. I can't speak across the board, but I've heard it from a number of my institutional brethren on the mandates for loading up on stocks they have strong fundamentals are on, especially in pension funds. And it's why we saw a lot of whales starting to buy right around this 200 simple moving average. I mean, it's nothing more than mechanical buying, forced buying there happening. And what we've also noticed is there's a bit of an air pocket right around here. So if we are able to continue above this, and we did close above that, the 390, I could see some continued action into 417 just based on the volume profile. And the 417 is the most traded area in the last 3 years. So I wouldn't be surprised if we had a magnet back towards that. However, that might be one of my first take profits for sure, especially on some of my shorter dated calls. Now, if we look at the daily, similar thing has happened. However, it's not as bullish as some other names, but I am still personally very bullish on this, at least for the long term, because of fundamentals, which is that we haven't reclaimed the daily super trend yet. However, we reclaimed the 20 simple moving average, but our stack is still screwed up, meaning the 20 is below, the 50 below is the 200. So there's a lot of repair that needs to happen there. But we saw, like I said, in some previous videos, a lot of gapping the first time the SaaS apocalypse trade unwound and we came down into these lows. And when we gapped out of that, we left a lot of holes that are being repaired. And I tend to always want to think that those holes need to be repaired, both bullish and bearish. That's not a hard and fast rule, but it's not uncommon for this kind of thing to happen. We need a lot of activity around them. It's not just a once and done situation there for me to feel the best about it. Again, not across the board, but on some of this localized price action, it feels a lot better to me to know that they're actually tradable, to see how price is reacting, and to start to get a sense for what levels are truly important there. So that's on the daily there. And if we break down to the intraday time frame, so we're going to look on the 1 hour there, we're a bit oversold here, and we're getting some RSI bearish divergence. So it wouldn't be odd for us to see a pullback to come the open tomorrow. And where I'd be looking for a pullback personally would be at the 380 level. And if we come back down to the 373 level, repairing this, like I mentioned, I like to see gaps filled a few times. That wouldn't be odd. And I would actually be playing this with some bullish intent if we were to come down to S3 right there. I don't think it's likely. S2 seems more likely to me, but I'd want to see that come down and a reclaim of across the last few days there for us for continued upside there. So that's Microsoft for me. I am bullish in the long term, positioning wise, as we've talked about in a lot of videos. I have long calls, I have cash secure puts underneath. I'm in some leveraged ETFs as well, have some call spreads, and have a lot of long term shares on that. All right, next let's look at CRM. So we're going to be looking at some more software names. And you can see that a lot of them are trading similar to IGV, at least in the most recent past. So CRM on the monthly, it actually has had a whole lot more chop. And I think one thing people are worried about is a head and shoulders where you have a shoulder here, you have a head here, and you have a shoulder, or even some kind of fractal one where you have the head right here, this left shoulder, this right shoulder broke down. And then you also have this being the shoulder and this being the head. And now we're going to form a new shoulder. But what I'm actually seeing is choppy price action here. However, this is on the monthly, and we said this is 10 years worth of data. This is the point of control. We've come down to the point of control over the last 10 years. So for this to be support, I would not be surprised. And it's one of the reasons I've started to build a position, a very large position in CRM, because we're at this point of control in the last 10 years. So what I'm saying is if people are trying to get this at a good price in the last 10 years with the kind of average of the assumptions they've been making, is this a good one? And I'd say yes, statistically speaking, that's probably good. Also considering I look at their fundamentals. Like I said, this is part of the alpha harmonic confluence matrix where I put, fundamentals, indicators, timeframes, all that good stuff, gex, order flow into an algorithm and kind of weight them together to see if it's a good point. And this carries a lot of weight for me, is that we are at the point of control in a very large time frame. Also, we are at the lower end of the regression channel here. So we're 2 standard deviations below the mean price trend line. So I do very much like that. And then you could see on smaller time frames, and when I say smaller, I mean the weekly and the daily. So on the weekly here, we started to have RSI divergence. Let me get that there. A lot of these lines were drawn on the daily, but they are carrying over to the weekly. You could see here on the daily, we had starting at this point, and it was an oversold one. I love oversold RSI bullish divergences. Lowest price here, it gets even lower to the lower low, and price was oversold. The RSI was oversold. And over here, it's still oversold, but it's less oversold and price is lower. So I love that. And you can actually see that happening here on the weekly as well, although you're just going from one oversold to not oversold, but it's still RSI divergence of the bullish type. So I very much like that. And it's not surprising we saw a bounce when that happened. And like I said, we have this regression channel. As far as the simple moving average is not as compelling here, we are below all of them, and all of the simple moving averages are pointed downward, and the stack is in the opposite order that I want to see. So this is very bearish. However, if we can get above this node, and it's probably easier to see it on the daily, but it is quite a ways away here, which is around 180, and it is consistent on the daily. So this is over the course of a year, and this is over the course of 3 years. But we have an air pocket essentially, meaning that if we can get above, there's an air pocket we kind of pop through here, and we're going to start hitting some resistance. But if we get above this 180, I can see 230, 220 coming in towards the end of the year. So that wouldn't be surprising to me. And you can also see back here, if we look at the monthly, it's not crazy to see over the course of the year this thing moving about $150, $160. So it's a really great one for me personally to play options. Again, this is not financial advice. You need to manage your own risk. But for me, this is the kind of asymmetric upside that I'm looking for, and it moves enough. The ATR is enough. Look at 1 month, it moves $33. That's enough for calls to be meaningful for me personally. And then if we go ahead and we look at it on the daily, in intraday time, I really like how we closed on Thursday. This looks a lot better than some of the other names we were looking on intraday timeframes. And again, that often is the case with some of these names that are beaten down that have larger ATRs. They have further to go. They're eating up liquidity a bit differently. As you can see, there was a lot more air pockets. And so here, this looks like a nice trend. I could see us pulling back down to 160, this previous little breakout, fill this gap. Maybe we even sweep it, come down to 155. People get scared, and then we continue upward. That's the kind of thing I am personally looking for right there as far as the pathing goes. And then we've talked about the fundamentals of CRM before. I really like it. Revenue was up quite a bit, up 10%. Their free cash flow is huge. It's at 14.4 billion, up 16%. So it was all really great. Their trailing PE was around 19. Forward estimates are near 12, and the PEG was below 1 current data. So again, this is like kind of a D-rated quality compounder in my opinion. So I am long on this one. Next, let's look at ServiceNow. So here we're going to look at the monthly. You could see that we recently were oversold on the monthly, and that happened right when we came to the lower regression channel. So we were expecting a bounce, and we started to see that. But a lot of that bounce got taken back, but not fully. And you can see on the fibs what's happened here, because we actually mapped this out on the daily, but of course it holds on the weekly. We didn't lose the 78.6. And we talked about this before. When you lose the 78.6, it's very common to retrace the whole thing, and you need to start over. And so that didn't happen. And now we've leveled up to the next level on the fib there. So that's compelling. However, we are in a downtrend there on the super trend. But like I mentioned before, it's not uncommon to find the bottom of your super trend towards one of these regression channels, or maybe, of course, towards previous resistance that is now acting as support. And you can see that's what kind of happened right here. So I do like this level, but more than anything, I like ServiceNow because of their long-term fundamentals and because of this gigantic drop from 239 down to 77 when their fundamentals were accelerating. So I love to see things with great fundamentals that are accelerating, but their price is not That means that there's some near-term sentiment issues generally. So let's go ahead and look at it now on the weekly, and we can see that we are starting to have some consolidation around here. But you can also see that this may be an inverse head and shoulders. Right here, you have the head, and here's the left shoulder and the right shoulder. Although I guess if you're upside down, that's still right. uh, or if you're facing forward or backwards, it doesn't really matter. The point is here, what we started to see was RSI divergence, right? When this this oversold RSI reading was happening on the monthly. And so when we see this at this time frame, we actually did get in very long if you had been following the channel. And so I love this as a point here, and it did turn out to be a reversal, and we haven't broken down below it. So I love that because we're reclaiming these levels where we saw a lot of people probably get trapped. And now when we look at it on the daily, what I really like about it is that we had even more RSI confluence right here that kept happening. So I love it. It happened, I believe, mostly just this one time, but you can actually see it from here to... No, you can't see it from there. Anyway, a lot of RSI divergences that we were pointing out. But we're also at the point of control, and this is over the course of a year. So I love that. And it's also over the course basically of 3 years. So I would be targeting more this 110 than I am targeting this 100 range personally. And I think that's kind of been the case that you've seen, is that we're oscillating between, like 104, 105 up to 110. And that keeps happening right around here. So I like that more than I do the 90 to 100. Essentially from a point of control. But if we look at the volume profile, what's even more interesting is that we kind of ripped right through here without a whole lot of volume happening. And if we look at it on the the weekly here, I could see that actually holding up until we get to the mean reversion that we would be targeting, which would be 156. So for me, that's where I'd start to take off some of the size that I have, even though I have conviction in the long term that we're getting back up to all-time highs. Again, not financial advice, but that is actually what I'm reading in the fundamentals. But there's so much repair that has to happen. The bull market has to maintain that I want to take profits when we start to hit some of these levels that I'm seeing, which the mean reversion using the regression channel is really important to me. And then if we look at it on a smaller time frame, similar to CRM, it had a really nice close in to finish there where it held this 200 SMA on the 1 hour. But we do have some pretty wide ranges here from 113 all the way down to $97. So I'm expecting some volatility there. Plus, we are starting to see some bullish divergence on the RSI on intraday timeframes. So I'd expect some type of slight pullback, perhaps. But I didn't take my size off. I would just have to accept some of that volatility in the near term, because in the long term, I think this is looking relatively bullish. All right, so I promised everybody one that I haven't been covering or that I've been building a large position in, and that's SAP. So before I get into the technicals and look at the multi-time frame analysis, I want to talk about why SAP is interesting here. And that's because it doesn't look like a broken business. It looks like a quality enterprise software name that's been aggressively derated, a lot like some of the other software names, of course. And the stock is now trading around a forward PE near 19, price to sales around 4.5, and EBITDA around the mid-teens, which is not a deep value, but it is compelling for a mission-critical ERP platform that's still growing cloud revenue and backlog in the mid 20% range. However, the market punished SAP because the expectations got too high and the cloud backlog growth wasn't exactly accelerating as much as it wanted. It was decelerating a little bit, but 20% is still great. And down here, though, the stock is sitting near major technical support and showing bullish RSI divergence, and the risk reward starts to look asymmetric. And also because I think if the business is just stable, meaning they don't blow it out of the water again, but they just stabilize and stay where they are, and the numbers that are showing are just here to stay, it's already wildly discounted in my assessment of their financials. So now let's jump into the multi-time frame analysis to see why else I think it's compelling. So on the monthly over here, you can see a few things. One, that we've come back into this previous breakout. So a breakout retest. It was first resistance. We came back down. We finally broke above it in spectacular fashion here. Now we've come back down, tested it. It didn't quite hold. That's not abnormal, especially when you fall with this much pressure. Bounced off it a little bit, have come back below. However, we are still above a lot of different important things here. One is the 200 simple moving average. The other is the point of control. But again, remember, this is over 10 years, okay? So I'd actually be taking more signals from the weekly than I would be from the monthly at this point, but it is very important. And I would say that support and resistance are more important to me here than this moving average. So when we break down over to The weekly, we can see some important things. One, that we lost the 200 simple moving average, and the 20 has crossed below it, and the 20 crossed below the 50, but the 50 hasn't crossed below the 200 yet for me. So it's not all systems to the downside. And I would say that this isn't the place where I'd want to get in necessarily if this was the only thing I was looking at. But I'm not just looking at the technical chart on the weekly. I'm looking at it on the monthly, the daily. I'm looking at fundamentals, and I'm looking at sentiment. So, but this is a data point to the downside for me. However, we have been in a very low structure downtrend for a very long time. You can see it here too. And there's a lot of air pockets, if you will. So we really need to reclaim the 192 to get there. But first, before we do that, we need to reclaim this 175. But I do expect some of that to happen, and I'll show you why on the daily chart here. But also look at the volume profile. Why I said 175 over the last 3 years, that has been where volume is trading. And I would tend to trust the last 3 years because that's kind of the bull market that we've been in. So I like this as a better level than I like the levels down here, like I was saying. I'm looking at this time frame a bit more. Now, when we go down to the daily, we can see a few other things. The first thing to notice is this RSI divergence. And so we saw it from here to here. And it was like a lot of the other software names. And that's when we started building our position. But now that we've reclaimed this 155, I feel like enough people were trapped down here that I started to go in long. However, we were getting rejected off the 20 SMA on the daily, so that was to be expected. And I don't think it would be weird to come back down again towards this regression channel, maybe fake out a few people and come back up. But I really like the fundamentals here, and I like how oversold this stock has been. And people might not be looking at it on multiple time frames the same way that I'm looking at it there. And then if we look at it on the intraday time frame, there's a few things that are really interesting here, which has been one, how it's treating the pivot points. And we talked about this before in some other names. When you start reclaiming the pivot point in general and start holding above it, it's a bullish sign. So the pivot point right here, it held above and started trading here. Here it wanted to hug it, and this was the final flush down. So that's kind of the end of that trend. But from this point onward, we've now been trading above it. So here's your pivot point. We held it. We traded above R1. Pivot point, we traded above it, held R1. Then we had a bit of a backfill day, not crazy because there's a fair value gap there. But again, we got way above the pivot point and held it. Next day, got way above the pivot point and held it. So it's not going to be an everyday thing. But again, statistically speaking, we're looking at how often is this happening? What kind of trend are we in? So we tend to be in an uptrend based on the pivots. And I do use those. Sometimes it's harder to see what the pivot is. But if you're going above the pivot point repeatedly, you're probably leaning towards more of an uptrend. But I do like the super trend there as well. That's not a hard and fast rule. And unlike some of the other names, we didn't see the bearish divergence in the hourly RSI. So the hourly price made higher highs and RSI also made higher highs. So I do like that. So I just wanted to cover SAP for you guys briefly. Let me know if you want to see more about it, but it's a name I haven't seen a lot of people talking about. And I just bought kind of a large position for a lot of regional traders, but kind of small for one of my accounts. But I do like it as a long-term play. That being said, again, not financial advice, but this thing really could fall quite a bit more. I mean, if you were really to go into a bear market, we could come all the way down to 100. However, the fact that this thing moves $29 on average on the monthly is something that I like for getting into calls at this level because I needed to move enough to make those calls worth it. So now let's look at Meta, everybody's second favorite stock on this channel. And we're going to look at all of the time frames again, but we're going to spend less time on the higher time frames, and I'll tell you why on this one. So the first thing to look at is that we had this epic bull run since 2023. And that is one reason why I don't love looking at a 10-year time frame, because the secular bull market we're talking about occurred over this period of time, also in the larger market. So when I'm looking at volume profile over the last 10 years on some of these mega caps, it's a lot harder to use that as a data point for where they might go. However, as you saw, regression channels are very helpful over that time period. So I do like to use this chart, and I used it as an initial data point, but I don't think that we're coming back down to the point of control over the last 10 years of $174, at least not this year. But I'm using it essentially to see, is the trend intact? And yes, it is intact, but we are starting to see a lot of digestion up here. And on the monthly, scary enough, we've lost the 20 simple moving average. So that's something to wonder about. But we haven't come back down to the 50 simple moving average or the The 200 simple moving average. So those are things I'm watching on the monthly, but it's less useful to me than something like, say, the weekly or more specifically, the daily. So on the weekly, we could see a lot of what we've been talking about playing out here, which is this major pullback and then consolidation and chop there. However, it doesn't look nearly as nasty as it's been feeling, and that's because ATR on a weekly is $50. So when you're invested in this with any size or leverage, it feels like a whole lot more. And we are also under the 20 simple moving average, and we've fallen below the 50. I'm sorry, there's a lot of lines here. We've been trading this intraday. But we're below the 50 and the 20 to 20s cross below the 50, but we are above the 200. So it is still constructive, but it's the first time we've had a cross like that in a very long time, which is one of the reasons it's felt so bad. But because this is the first time we've had a cross like that, I don't expect this to be the end all be all, if you will. And then when we go and look at it on the daily, it becomes a little bit more compelling. So over the course of the year, the point of control has been 605. So I would expect us to revisit that level at some point. And as you all know, we've seen some RSI divergence previously on this on different timeframes, and so I don't want to cover that. You can go back and watch some of my Microsoft videos. I just wanted to throw this in today because we are Meta videos, because we are allocated to this, and what we've seen that we liked a lot was a lot of whale activity occurring on Friday, because we had this huge pump here on the daily on I guess this was into Wednesday. So Tuesday, it was actually Wednesday morning, but Tuesday going into Wednesday, we had a huge pump on Meta announcing the cloud services that they'd be selling back some compute to the market. And we got that huge pump. And then we got a pullback, and everybody was starting to freak out, I think. But after a pump like this, I mapped out the fibs. We only came back down to the 50% retracement, and that was a previous support level. And it was previously the 618 on a different fib. So this looked like a really great place for us to pull back to, and I wouldn't actually be that scared of it. And it didn't happen on significant volume. I didn't see it necessarily confirmed. And what I did see was I saw a huge amount on, I can't actually pull them up after hours here, but there was a lot of whale activity, people buying a lot of volume at the 582, 585, I believe 586 specifically. And to me, that's very bullish. So in general, I still love the name. I still love the charts that are looking here. And these are one of those ones that I think are going to chop up a lot of people and may even pull back a lot harder than some people are used to. Sorry, I have the futures open on that chart, and it looks like futures just opened about 40 minutes ago. There may be some really great activity. But I'm trying to get through this video for you guys before Sunday. So that was Meta real quick. Let's talk about TLT. I'll try to do this quick, but I think this is one of the most important trades in the market. And I don't see a lot of people talking about it on multi-time frame analysis. And so one of the most important things to do is to look at where we are relative to the last 9 or 10 years. And I said it mattered less in Meta, but it matters a whole lot more in TLT, which is tracking larger cycles. And so one of the important things to see is where again, I'm on the monthly, which is I have 10 years of data for the monthly, but TLT only goes back 9.5 years essentially. So it's a little bit less there. And that's why you can see this 200 simple moving average on the monthly doesn't go all the way back, because we don't have enough data for it. But we are close to the all-time lows on this instrument. And I find that very compelling, because when we did reach that all-time low in 2023, which is actually when I went pretty hard into it, and I still have a lot of those holdings, we saw RSI divergence right here, bullish RSI divergence. And we haven't lost that level, which is what I love to see. Now, granted, this isn't something that's going to shoot up, and I know a lot of people want to see a massive recovery, but we probably wouldn't need rate cuts. We would need a less inflationary a backdrop for the markets, but you are collecting yield on this. So I was okay holding this for the long term. And for me, I'm continuing to build up a position. And I'm not saying that we can't fall below these all-time lows, but what I am saying is that the dividend is going to offset some of that for me, especially if I'm scaling in. Now, I'm also playing this more tactical near term with some long-term calls and some leveraged ETFs. So I am expecting a higher move, but I just did want to point that out. And again, not financial advice, trade this as you will. This is just my own research. But when we look at it on the weekly, it starts to become the most compelling signal I've seen as of late, which is that you have this downtrend right here. And we've continued to try to break above it. And this is on the weekly, mind you. So I know this felt like a very big time frame, and now this seems small. This is still a really large time frame here. We are breaking above this trend line. And every time we try to break above this trend line, we get pushed back down. But prices, as you saw in some of these other earlier, as you saw on the monthly, pardon me, it's been a long video. As you saw on the monthly, it's consolidating down here. So I am expecting that if we can break above this trend line with some power, we are going to build enough pressure essentially to pump through it. And not only that, the 200 simple moving average, what we want to see on a downtrend is for it to start to even out before it slopes up. So I think we're kind of at the end of this move. And it's not surprising. We started to see the expectations for rate cuts improve a bit, meaning we're thinking that after the last Fed meeting, there might be rate hikes. But after the data that came in last week, those rate hikes got pushed back or lessened. So I am really liking TLT around here. It's been holding its own. This range is really, really tightening. And because the 200 simple average is flattening out on the weekly, I actually see it to be more of an upside play. Plus, like I said, we're at the point of control on the monthly. Again, I'm stacking all of these things to see, are we more likely for asymmetric upside or asymmetric downside? And then am I willing to play that? And then it becomes, how am I willing to play that? What is my trade architecture? And we could talk about that in another video. Please leave a comment if you want to see trade architecture, because like I'm saying, all of these things, figuring out if we're asymmetric to the upside or downside, what our levels are, then go into a model about how I structure the trade. Okay, so now let's go into the daily. And what's happened here is we lost the daily uptrend, and I'd be curious to see how long we lose the daily uptrend on the super trend, because as you see, it's not uncommon around, especially points of consolidation or trend reversal, for the smaller timeframes on the daily, for example here, to oscillate between up and downtrend more frequently, as opposed to when you're in the meat of the trend, you may be in an uptrend or downtrend for a lot longer on a daily or the weekly. So I'm seeing a lot of oscillating here. But again, this trend line that we're starting to break out of after this kind of repeated attempt at it and this consolidation and RSI divergence, like I talked about, is really, really compelling to me personally. Again, not financial advice. So that's TLT on the monthly, weekly, and daily. Let's look at it real quick on some intraday levels here. Put it on the hourly. And again, I don't have aftermarkets open here, but we have a big gap to fill there. So if we can come back above that, I might expect some more downside before blasting through it, personally, for the pathing on the 1 hour. But for me, TLT is not something I'm playing tactically for the 1 hour. Some of my swing trades are more like in the next month or two. And then I have some really long-term positions where I'm, like in this account, I have 230 shares. Those aren't things I'm selling tomorrow if we have a big pump. That's the deep dive prep for Monday. Huge thanks to everyone who subscribed, commented, and liked. It really does mean the world to me. And if you found this helpful, please subscribe, turn on notifications, and leave a comment with the tickers you want me to cover next. Also, let me know what you want me to focus on, this kind of chart setup, or if you want more macro setups, the option flows, the GEX, the support resistance, the trade architecture. Let me know how best I can help. And this was a long one, I know, but that's the point of the weekend prep. The goal is to come into Monday with a plan, particularly on specific names, and not just react emotionally to whatever the market throws at us. Thanks so much. Happy investing. Enjoy the rest of the weekend and stay safe out there.